You'll have like a $300 or $400 bill. In some cases, you tip $500 or $1,000 and you close it and they're expecting $40. And so it's so great. It's just like little things like that mean a lot to people.
Chamath Palihapitiya is certainly one of the greatest investors in our current age, with a return of over 30% every year since 2011 through his fund Social Capital. Because of this, many are starting to call him our generation's Warren Buffett, or the Warren Buffett of tech, and Chamath describes himself as a disciple of Buffett. However, Chamath is looking to take his investing to the next level and is creating what he calls Berkshire Hathaway 2.0. In this video, I'll be going over Chamath's unique plan to execute our generation's Berkshire Hathaway, which he believes will generate a predictable return of 20 to 30% per year. Welcome to Kaz Gains Capital. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Personally, I am a fan of Chamath and I've listened to many of his interviews online. While being featured in a recent podcast with Capital Allocators, Chamath detailed his reasoning behind creating his own version of Berkshire Hathaway. He believes that in our society, money is power, and those with money can push their own perspective into the world. In the simplest form, this can be seen when people donate their own money to causes they believe in. Not everybody will donate to the same cause either, because our biases are different. Some rank certain issues or policies over other issues because they believe it is more important. With his many successful investments that have generated him massive returns, Chamath has more than enough capital, which grants him the ability to expand from just focusing on growing his capital at a fast rate. Now, he wants to be able to use his own money to influence society to accelerate his own worldview, and he wants to execute this in a similar manner to what Warren Buffett has done with Berkshire Hathaway.
I wanted to build Berkshire 2.0, and that was always my ambition. And the problem with wanting to build Berkshire 2.0 is many people don't respect capital allocation. They don't think it's a skill. And many people think it's not doing anything. And when Warren Buffett describes his job every day as reading and thinking, I think a lot of people think, what a checked out dilettante. How dare he read and think all day? That's not a job. And I just think it's so further from the truth. Because in many ways, what Buffett was able to do, and this is me imposing my own narrative now, looking backwards, but he was able to use capital to accelerate his worldview. And a lot of his worldview was around American exceptionalism and American GDP, and the belief in the American consumer and the American economy. And so whether that's Precision Cast Parts or BNSF or Geico or See's Candy, he's done incredible things to move the American economic engine forward. He was voting with his dollars around businesses and ideas that were really critical parts of the American infrastructure for American middle-class success. I would like to reimagine what that means for the next 50 years. So from 2020 to 2070, how would I answer my version of that? How can I use my capital, compound book value in a way that accelerates my version of what ideas are really critical, what American exceptionalism should mean, how I close the inequality gap, how I drive a renaissance in the American middle class. And that requires deep, profound thinking and controlling and owning very critical future resources that are poorly misunderstood today, finding the secrets hiding in plain sight every day, and then putting money against that.
Chamath sees Warren Buffett as using his capital in Berkshire in a similar fashion to how Warren Buffett has done this over the past 50 years. Chamath wants to do the same over the next 50 years. It's fascinating that Chamath is so forward-looking with his allocation of his capital and willing to take the risk of putting it into something that may not even end up working out. Chamath could easily sit back and collect money from his current investments for the rest of his life. For his entire career, he has been embracing the idea of taking risks and working on something he truly believes in. The way he intends to create Berkshire 2.0 is very unique. Throughout all of this, Chamath, like Buffett, still strongly believes in the concept of investing into for-profit businesses for the long term.
All of my money is going to get compounded in for-profit businesses where I can aggregate human capital, social capital, political capital, intellectual capital to solve problems. And that's going to drive book value.
This leads us to Chamath's grand vision for social capital. which is to become an economic engine that predictably compounds book value. He splits this into 3 primary segments: private investments, public investments, and experimental bets. Now, we will go more in depth into what Chamath means by these segments. The first branch of Chamath's firm is private investments. This includes both minority investments or buying a stake in private companies, as well as majority investments or buying companies outright. Chamath says that he has done this successfully with a return of 40% every year over the past decade, and thinks that he will still be able to continue maintaining it in the future. The key variables that have served him well are companies that are monopolistic and have data center assets that he thinks will be an essential resource for the future. Chamath will continue making 1 to 2 private investments a year that are initially not very well understood by others. This branch, private investments, has been something that Chamath has thrived with his entire career, and he definitely has no plans on slowing down. What Chamath is doing in this branch is relatively new and pretty unheard of in the finance world. As we know, Chamath is a huge fan of SPACs, or special purpose acquisition companies. With social capital, Chamath has put forth his own capital to bring private companies public, as we can see with Virgin Galactic, Open Door, and Clover Health. Over the next couple of years, we will definitely see more of this. In fact, he plans to do this in the future with biotech companies. He also has explored the notion of launching entire ETFs for the public to invest in. This is all due to his belief in giving retail investors the opportunity to invest in the companies that are normally private. Chamath thinks that this will benefit the company because they will have more access to capital, and also its investors will be able to benefit on the return. Chamath's main reason for launching this branch was to find ways on how to maximize the ability to grow social capital at a return of 20 to 30% book value every year. And the approach that he is taking is definitely unprecedented. Last November, Chamath put out a tweet launching his Emerging Managers program. This was an attempt to find investors with a non-traditional background in investing and recruit them to the team at Social Capital. From this tweet, we can see that Chamath wants to start in US equities, but actually wants to eventually branch out to other markets like worldwide public equities, crypto, and even trading cards and sneakers. This may sound incredibly risky at first, as literally nobody in the investing world has ever done something like this before. However, going back to what Chamath believes about Warren Buffett accelerating his own worldview with his capital, he believes that through acquiring this worldview, this also means that Warren Buffett acquires biases as well. This could range from not preferring to invest in the IPOs to literally refusing to eat sushi. In the investing landscape, investors have biases as well, which means that some investors will see opportunities where others don't, and vice versa. With the adoption of new perspectives, Chamath strongly believes that he will be able to find investments traditional asset managers won't. In fact, he says he prefers to have $500 billion managed by 500 people instead of a small number like 3 people. This viewpoint in investing is vastly different to what Warren Buffett and Charlie Munger have championed throughout their entire time at Berkshire Hathaway. Chamath will be taking on a huge diversification approach because the people that manage his money will be investing in many different companies with their differing mindsets. So there you have it, Chamath Palihapitiya's master plan to construct Berkshire Hathaway 2.0. What do you think about his plan, especially his Emerging Managers program? I will certainly like to see how it plays out. If you guys want to check out the full podcast where Chamath details his vision of capital allocation, I'll leave it in the description below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.